I'm going to give you a very quick introduction to the stock reports. Stock reports are the most popular part of the Stockopedia website, as we've got tens of thousands of these standardized reports beautifully laid out with one goal in mind: to help you make faster and more effective decisions on shares. So I'm going to take a look at one and show you the 7 things that I personally think are the most important on the stock report. So let's dive in. You can find stock reports either by clicking on any link on any share, in any list, in a screen or a portfolio, or by searching up in the top toolbar for a company you know. So I'm going to look at Alphabet, which is Google's parent company, and we're going to run through the stats here. Now, the most important figures you'll find in the header, in the key statistics section. You'll see where it trades in America, what the quote is, what the size of the company is, and more. And if you don't know what something means, you can click any of the definitions and you'll get a quick pop-up definition explaining it in more detail. But the number one thing I like to look at is the stock ranks. The quality, the value, and the momentum of the share. Each of these metrics are scored between 0 as worst, or ranking poorly, to 100 as best. And they come together in an overall stock rank, which, as you can see here, is scoring 82 for Google or Alphabet. That quickly lets me know whether I want to investigate further on a share. And it also is a measure of whether something is a little bit more of a punt or a gamble if it's low ranking. And it really lets you know where you are. Personally, I like to see that at least 2 out of 3 of the basic quality value momentum scores are above 80. That's a personal preference, but it leads into the second thing that I like to look at, which are called the classifications, which you can find here. We classify stocks across sector, risk rating, size group, and the stock rank style. And in just a few brief words, you know exactly the kind of stock you're dealing with and how it might fit into your portfolio. In particular, the risk rating is a 5-tiered classification ranging from conservative, which is low risk or low volatility, to highly speculative, which is a very volatile share. And the stock rank style is a 9-tiered classification, which splits into 4 winning styles, which are labeled in green, 4 losing styles in red, and 1 style neutral. When you see a stock that is highly speculative, micro-cap, sucker stock, you know you're dealing with a very, very long odds situation. I personally steer clear of those. You can see here, Alphabet is a conservative or low risk, large cap, high flyer. The third thing I like to look at is what are called the traffic lights. For every piece of financial data on a stock report, we provide these traffic lights, which rank, for example, the PE ratio here, for the company against its industry group or against the market as a whole. If a traffic light is thick and green, it means it might be cheap, high quality, or in an uptrend, depending on the ratio. If it's thin and red, it might mean that metric ranks quite poorly against its peer group. So at a glance, I can see here that Google has very, very high quality metrics. It's very, very profitable, and it's almost best in class in its industry and against the market as a whole. The fourth thing I like to look at, it's a little bit further down, is what I call the red flag section in here. Here we can see the fundamental health, the trend of the fundamental health of the company, which is fairly positive. We can also see the bankruptcy risk, which is almost negligible for Google, as we know, a very cash generative business, and its earnings manipulation risk, which really helps you understand whether a company might be fiddling the books a little bit, and it's low for this company. I don't like investing in any shares that have one of these red flags flagging quite negatively, and it's a very, very quick sanity check on a share. The fifth thing I like to look at is whether the company qualifies for any of our 65 guru screens. Now, we model some of the investing classics written in the literature of finance, written by some of the great legends such as Marty Zeig, Warren Buffett, Jim Slater, etc. And every night we screen the market and we tag every stock that qualifies. You can see here that Google qualifies for 5 of these strategies, which is quite a good factor. And you can whiz through them using this nice carousel. And you can see it's qualifying for some Buffett-esque screens and also some of our proprietary methods. And that's a very, very quick sanity check and shows you that some other investors in the market might be looking at it. The sixth thing I like to look at is the financial summary, which is this large table block here. It gives you 6 years of financial history, often the trailing 12 months period, and the 2 forecast years for a range of key statistics. This lovely little pop-up chart on the right here gives you a quick indication of whether these metrics are trending up and to the right, which is always good for profits, etc., or whether they're nice and steady and stable or rising, which is always good to see for these profitability metrics. I personally like to look at some of these cash flow stats, as it shows me, for example, if the company is making cash, how much they're spending on capital expenditure, and whether there's free cash flow that can be paid out as dividends or reinvested. The last thing, or 7th thing, that I like to look at quickly on a share is the trend in the analyst consensus. Now, this chart here, yes, you can see if it's a strong buy or a strong sell from the analyst community, but it's this trend in forecasts of the profits which I think is most important. Again, I like to see that trending up and to the right. It shows that brokers are having to increase their estimates on a stock, and trends tend to persist, and that can be a very good leading indicator of future outperformance. Now, there's bags of other information on the page, from what it does, who the directors are, where it is, where its address is, etc., etc. And this is a fantastic jumping off point to go and find news information, event information, and more. I hope you enjoy these reports as much as everybody else in the community. They're popular for a reason. Thanks very much for listening. That's really all I've got to say. Cheers.